Existence of non-bank financial technology companies is global, and in many parts of the world, the use of the mobile phone by fintech companies to do what banks traditionally did is fairly common, becoming a threat to banks' clientele and even profitability, according to a Citibank financial expert speaking to financial journalists in London recently.
It's either about, for the incumbents, dealing with market share challenges, market share risk, losing clients, or it's about losing margin, seeing your margins, fee income and net interest margins come under pressure.
It's not different here from the unfolding scenario in Europe, but especially Asia, where Chinese company Tencent is not a bank, but has 600 million users, more than any bank in the world.
They are what we call, the smaller players that are purely non-banks that provide financial services on digital platforms. So they are a bit of a disruptor. So they provide, an opportunity to take away market share from the banks. So we have to be very careful.
Why? Because the mobile device and the smartphone in the last 10 years has changed our relationship with how we interact with finance.
When mobile-based platforms enable you to pay bills and even lend to you at a small interest, they are getting into the space of banks. The banks globally are responding through partnerships and incubation for these fintechs, and investment by banks in fintechs is on the rise. For local banks, their hands have to be untied a little by the regulator.
I think in the banking sector, of course, it's very, very regulated. It's been slower, focusing mainly on controls, processes, just to make sure, because we deal with the most liquid item, cash. Security is important. But I think that even within that framework, there can be a lot more innovation.
The financial sector in Uganda is grappling with the issue of the fintechs, and they're viewed as disruptors. But here in London, what the banks are doing, they are taking on the fintechs and working together to come up with solutions. In a way, you can call it collaboration. They're talking about things like AI, artificial intelligence, and making machines learn to do calculations and models faster and better than humans, so that they can remain on top of the financial sector, globally speaking. Could Uganda pick a leaf, especially the banks? Samuel Setumba for NTV, here in London.